what we're doing is currently witnessing a major inflection point in how gold measured in all fiat currencies is priced. So what we're saying is we're privileged to be at a point where we're living through what the history books will look back at as an event where the weaponization of physical gold took a whole new turn, opening up a highly liquid non-dollar mechanism for the BRICS, SCO, and ultimately the Eurasia Economic Union, the EAEU, to facilitate trade outside the unipolar legacy system, benchmarking commodity, energy, and oil trade to this real physical supply-demand gold gram price.
After months of discussions on currencies and commodities, the alliance led by Russia and China appears to have settled on gold as the basis of a planned new international monetary system, apart from the dollar and euro. The renowned analyst Andrew Maguire believes that this is a significant moment that will change how gold is valued in different currencies. This development provides a way for the BRICS countries and the Eurasia Economic Union, EAEU, to trade more easily outside of the traditional system that relies on the dollar. In a recent interview, Andrew Maguire expressed that the recent developments in Russia indicate the trial of a physically backed gold benchmark non-dollar currency. According to Maguire, this action signifies that Russia has stealthily begun implementing Sergei Glazyev's golden ruble 3 inches currency, ultimately threatening the US dollar and its globalist objectives. By digitizing central bank physical gold on a trustless blockchain, Russia aims to bypass fiat intermediaries and establish physical gold as a medium of exchange, unit of account, and store of value, essentially creating a currency. This new trade settlement currency is being benchmarked using gold grams. Maguire highlights that after 6 months of infrastructure development and forming a gold alliance with China, Russia now conducts over 80% of its trade in rubles and yuan. Following the recent SEO summit in India, the next step is to establish a more formalized link to integrate gold into commodity settlement trade with Iran, which will likely be announced at the upcoming BRICS summit in South Africa from August 22nd to 24th. The rise of gold-backed currencies could significantly impact the global financial system. One of the most significant impacts would be the challenge to the dominance of the US dollar in pricing. Currently, many commodities are priced in US dollars. Maguire believes that as the gold-backed currency gains prominence in commodity benchmarking, it will challenge the dominance of the US dollar in pricing. Consequently, the price of dollar-denominated gold will rise. As physical gold becomes disconnected from the fluctuations of the US dollar, the flaws and imbalances in this market will become more apparent. Maguire sees this situation as an opportunity for individuals interested in acquiring gold. As the price of gold measured in various fiat currencies changes, there is a chance for gold buyers to acquire more gold for a lower cost. Now let's watch excerpts from Andrew Maguire's interview with Kinesis Money. Before we start, smash that subscribe button and remember to enable post notifications to stay updated on our latest uploads. Thank you and enjoy the video.
This was the thin edge of a financial wedge, telegraphing that a physically backed gold benchmark non-dollar currency was being trialed to price commodities valued in gold grams. Now, while completely ignored by the mainstream media, what this action reaffirmed was that Russia had stealthily begun to implement Sergei Glazyev's golden ruble 3 currency, ultimately is going to be the death knell for the US dollar and its globalist objectives. So we need to put this into perspective. By sanctioning the digitization of central bank physical gold placed on the trustless blockchain, Russia began the process of cutting out the fiat middleman, opening up physical gold to serve as a medium of exchange, a unit of account, a store of value. Hey, what does that sound like? It sounds like a currency to me. And obviously they're using that to benchmark this new trade settlement currency. Now, 6 months in, and having built the infrastructure and consolidated its interconnected gold alliance with China, over 80% of Russia's trade is now conducted in rubles and yuan. And following the recent SEO summit in India, the next more formalized leg to open up gold and the yuan gold-backed commodity settlement trade is upcoming next month at the August 22nd to 24th BRICS summit in South Africa. Now, the BRICS summit will pave the way for a BRICS SCO trade settlement currency tied to gold. And while the currency basket will comprise of a lot of components, physical gold is the linchpin of the currency bond market. And as the gold for the commodity benchmark eats into the unipolar dollar-centric price commodity market, it will accordingly raise the price of dollar-denominated gold. It has to. And we're in close contact with our well-connected first-tier liquidity providers, our Russian refinery contacts, to better assess how this will translate into a real physical demand, supply-demand price, and on what timescale. But what is clear is that the inherent Western cartel paper gold derivative game is ultimately going to explode. Nobody wants or expects the dollar to immediately collapse. No one wants it or expects it to. Clearly, there's a lot of vested interest that it cannot be unwound in a hurry. But as this process evolves, derivative gold will be discarded and real physical gold price will emerge. And since Russia started tokenizing physical gold to provide a tradable alternative to benchmark the non-dollar denominated commodity price, at the margin, this drain of physical gold is structurally impacting the imbalanced, ring-fenced, asymmetric, long over-the-counter short futures envelope, which has been the traditional game. This will become more apparent as physically deliverable foreign exchange gold dislocates from the dollar strength or weakness, and this is an opportunity for stackers to accrue more bullion for less dollars, pounds, euros, etc. So what we're doing is currently witnessing a major inflection point in how gold, measured in all fiat currencies, is priced.
Moving forward, Maguire believes that several countries, including Russia, China, BRICS nations, and an increasing number of African nations, are actively engaging in gold-backed trade. These countries are also acquiring more significant amounts of gold off the record to hedge and benchmark their respective currencies against the overvalued and rapidly depreciating US dollar. Maguire highlights that the People's Bank of China, PBOC, has officially reported consecutive months of gold purchases. Still, the amount they publicly disclose is relatively small compared to their unofficial gold acquisitions, which do not need to be reported. Interestingly, the Financial Times recently confirmed that central banks are repatriating their physical gold reserves to avoid potential sanctions on their foreign assets. These central banks are increasing their gold purchases as a hedge against high inflation levels, and they explicitly state that these purchases are in physical form. According to a survey of sovereign investors by asset manager Invesco, central banks globally made record purchases of gold in 2022 and into the first quarter of this year as they hunted for safe havens from high inflation and volatile bond prices. The move towards gold-backed currencies is a significant development that could significantly impact the global financial system. Let's get back to the interview.
To facilitate this gold-backed trade, what we've got is Russia, China, the BRICS Plus, the SCO, and an increasing number of African nations are openly adding published on-record gold purchases. This is stuff that is actually listed on the Bloombergs of this world, etc., etc. But also, additionally, they're adding much larger, unpublished, off-record monetary gold reserves to hedge and benchmark their respective currencies against what is really an overvalued, rapidly depreciating, debasing dollar. Now, while the PBOC has just officially logged its 8th consecutive month of official gold purchases in June, that was, and obviously now we'll see the July one coming up soon, that followed, if you remember, 100 tons of official PBOC gold buying executed just in the first 7 trading days of 2023. Now, these official purchases pale in relation to the unofficial monetary gold purchases, which absolutely do not need to be reported. Also, interestingly, the Financial Times, which is no friend of gold, this week confirmed that a growing number of central banks are bringing their physical gold reserves back home to avoid a Russian-style sanctions on their foreign assets. And this is the FT. And what they're saying is while they're increasing their purchases of the precious metals, in their words, as a hedge against high levels of inflation, it also confirms these purchases are in physical form. Also noting that the exchange, the ETFs, the exchange traded fund holdings, are being redeemed. We'll look at that in a minute. But it's clear. What is clear is that official reported central bank gold demand, when it's finally officially reported, is going to exceed all of 2022's reported over 50 years record physical demand levels by at least a factor of 2 to 3 times, while off-grid, unreported third-party demand feeding this trade will at the margin be responsible for forcing the unwind of leverage to drive the gold price substantially higher. And it's important to understand that as influential as they have been in pushing back against the rising gold price, the LBMA CME alliance, which was formed back in 2020 when we had that massive EFP blow up, the cartel, as we call it, has no control of off-grid demand. And while they focus on ring-fencing the billions of dollars of corralled US-centric flow inside this COMEX exchange, it results in actually fixing the related net stable funding compliant gold fix benchmarks in London far too low. This window of opportunity to capitalize on this paper to physical gold disconnect will not last long. Alongside this global race to alchemize synthetic gold into real bullion, unlike the Fed, COMEX ringmasters, let's not forget that by the commencement of 2023 trading, the Bank of International Settlements, which is the Western Hemisphere central bank of all central banks, had led the way on record repatriating, i.e. buying back every single ounce of the 50 years of accrued derivative gold bets. They would leverage gold bets. So what they did was square the last over 500 tons up against the synthetic cash settled COMEX bubble, just ahead of gold being revalued as a first-tier asset in January.
The rise of gold-backed currencies is a significant development that could significantly impact the global financial system. It could lead to a decline in the dominance of the US dollar and a more multipolar world economy. It is also a sign that countries are increasingly concerned about the global financial system's stability and are looking for ways to protect themselves from future crises. What do you think the future of gold-backed currencies will be? Please share your thoughts in the comment section below. If you found this video informative, remember to give it a thumbs up, subscribe to our channel, and enable notifications to stay informed about our latest videos on silver, gold, and copper. Thank you for watching, and we appreciate your support.